It is that dreaded time of year, tax time, but are you overpaying and getting all the deductions and credits you can? It is a serious issue. According to H&R Block, taxpayers end up leaving $1 billion with the IRS each year. About 1 in 5 people who did their own taxes have an average of $450 in unclaimed money. So how do you put that money back in your pocket? Here to fill us in this morning is Jim Buck, the president of Texas Legal. Good morning to you.
Good morning. Happy to be here.
Thanks for being here. You've got 5 tips that everybody needs to know before you do your own taxes or somebody else does your taxes. Number 1, first you say pay attention to sales tax.
Absolutely. It's estimated that 80% of people do not take care of the sales tax. So the first thing you need to do, take those receipts and make sure you're taking that sales tax deduction. If you don't take the sales tax deduction by taking advantage of adding up those sales tax, the IRS.gov has a calculator you can use to do that.
Okay, good to know. Number 2, job search expenses.
A lot of people aren't taking advantage of that. If you're looking for a job or have done that, making sure you're taking advantage of things like the cost of preparing your resume, travel costs associated with going to interviews. Make sure you're doing that.
Yeah, I had no idea that you could include that.
Absolutely.
Good to know. Number 3, moving or relocation.
Has to be in addition to your current occupation, but if you're relocating because of a current job search or moving because you've gotten that job, make sure you're keeping track of those expenses associated with doing that.
Okay. Number 4, charitable deduction.
Austin is a very charitable location, so expenses that, if you are giving to recognized organizations, make sure you're keeping track of that. You don't want to trigger a nasty audit because of that. Also, another thing that people aren't doing, fair market value of property that you are donating, you can also track that as well.
Even automobiles.
Absolutely.
As well. Number 5, educators' expense deduction.
This is a good one for teachers, up to $250 a year for things that are unreimbursed already. So for teachers, things that they go out and purchase for their classroom, this would be books, this would be computers, this would be programs, things that they use every day in their classrooms. Make sure they're taking advantage of that.
That is a good one. I've never heard of that, and you know teachers are out there buying items all the time that they're paying for with their own money. So, and a lot of this is good to know even going into the next tax cycle as we're in right now, because a lot of times it's too late if you don't save the receipts.
It is. And if I can go back to the moving deduction real quick, one group that doesn't have to worry about that moving deduction, there are a lot of IRS rules and regulations that talk about very restrictive on that moving in terms of time and distance moves and that sort of thing. One group that doesn't get pinned down on that are armed forces folks. If they have a PCS or permanent change of station, they don't have to be pinned down to those moves. And as always, this would be a great time to show our appreciation for those brave men and women who go out and defend our country every day.
These are great tips. I have never heard about a lot of these before, so thank you for bringing them to us this morning. If you missed any of that and you weren't taking notes, we're going to have this information on our website just in a few minutes this morning.